Hello, my people. So I say I'll dedicate more time to training you now to trade with pure technical analysis. And really, this is another training instructional video where I'm going to be showing you how to analyze the market without having to depend on indicators, but by just looking at plain charts. All right. So if you look at here, let's first get our very first trade in. It's a very small trade. It will be taken 1 minute. And if you ask yourself, why am I taking such a trade? Well, I'll answer you. Market, let me first draw something for you here to see. Market, it was in a downtrend. It came in, but then we found double bottoms down, and then market has been trying to show that it's now trying to move back up. We saw this. The second bottom was formed, then market failed to create new lows. That was a confirmation that now the market is taking off to go in an uptrend, and here we go. So at least we have to find this previous support, which became resistance, and probably if we hit that one, we'll have to drop back and see. Okay, here we took a cool trade. It's 1 minute trade, and we have to wait for this new low to be taken out. Previously, we've seen the market has not been creating any new lows, but it's been creating new highs every time. So that's a sign that there's a reversal and an uptrend is due by creating new higher highs and higher lows, whereby the new higher highs take out the previous lows and the higher lows take out the previous higher highs, and we just continue in that format. So we see now market has officially touched this place. Just so you know, these are 5 seconds candlesticks, but we'll be trading in 1 minute. So in 5 seconds candlesticks, we can see that now the market is changing direction from a downtrend to an uptrend, and I'll draw something again to show you where we have already reached. I like to show you guys this so that you can easily learn how to identify these key levels in the market. And if you do that, it will be easy for you to change how you trade. So this previously was support. And then when market broke below that support, it became resistance. So we expect market to come, touch that resistance level, and then we wait for a reaction. It might touch it and reject off and bounce off. Our price becomes a key level when price over rotates around that place for a very long time without breaking it or without, So we expect market to come, range around here, and then try to drop back down. Let's wait and see for that moment. I hope it really goes smoothly. I'll make a put option and try to come down with the market, because as you can see, by the way, it doesn't happen by magic, but when market reaches such a region, you see that the behavior changes. Okay? For guys who know behavioral changes, we see how the behavior of the candlesticks changes when it reaches such a very important key level. So we saw here market reached that resistance. It was previously support, but then now it became resistance because market already broke below it. I'll show you again. It reached there and then started hesitating. So it was a good moment that it's a rejection. So market will have to drop down and find this now new support that is below higher. All right. So just watch till the very end, and before the video ends, you will have gained a new perspective of how to trade without indicators, but by trading with plain charts. Trading with plain charts is very sweet, and it gives you the whole general market structure in just a plain non-noisy kind of screen. So our traders closed in profit, and now the growth is being seen. But like I told you, I expect market to drop down further until it touches that support level, or at least until it refills this gap that is being left behind here. You see this gap here? It has to be refilled. Market is a market of buyers and sellers. There's no one player. It's not a monopolist market. So we expect when there are imbalances, the market has to come back and correct those prices. So we expect market to come back and correct this price here with this gap that was left. And when it reaches that gap and fills the gap, then we just have to make a call option for down and just continue up. The gap is very apparent, you guys. It's between this huge candle that was created and market left a huge gap behind. So it's trying to correct that gap, and then we'll take off. The market will never move in a straight line. It will always have to correct those imbalances that were left behind in order for it to be a balanced market that everyone should be trading in. So it exactly touched there, and I've made a call option in the real balance point, which is sometimes called a fair value gap, FVG. All right, this is a term used in forex. It's a fair value gap where the market is trying to come and correct prices and move at a fair price. All right, let's see how it expires, but apparently it will expire in profit, and then it touches back our resistance level, which is becoming a key level because market reaches there and rejects a move. By rejecting a move, we see a lot of engulfing and a lot of ranging candles right there. That means that that level has held price and it does not break above or below. So keep your eyes on the screen and really learn how to analyze the market with pure price action. Like you've seen, I've already made so many trades in profit. I had to put it down again. We see that it treats the support, the resistance, and already rejected from it. So when I got a moment to make a put option, I had to do it right away. This is the key level I'm talking about. Sometimes, if you prefer, you can draw something like a trend line to show you that when price touches such points, it rejects off and bounces down. So I expect it to come back and drop down here. All right. So it's going to become a ranging market, and quickly it has done that. Remember, these are 5 seconds candles, so it does not take so much time to happen when we analyze such a move. This is the best thing about trading with pure price action. These are things that indicators not give you. But as a new trader, I recommend you to also use indicators just for your confirmation bias. As you know, you're just someone who's not super experienced. But if you're an experienced trader just like me, of course, you can easily see the market and can easily see those price levels. That means you'll be able to identify the key levels and place sensible trades. Now we're already at that support level, so we might expect price to fail to break below and just bounce off the support. Like already it's bouncing off the support. If you see that price line, it's bouncing off that support. So we might have to call and move up with the market until we reach that resistance level that we are seeing up there. Let me draw something for you to show you, because you guys are new traders. I don't know, they are experienced traders, but I put everyone in consideration, new and existing traders. For the new traders, I need to draw something for you so that you can easily see what I'm trying to talk about. So this has become our support level where price came and bounced off that support level. So we expect it to come and retest that support, retest it again, then maybe it might break down. If it breaks below the support, then we'll have confirmed and a continuous downtrend. If it fails and just continues up, then the support will have held. However, let's wait and see what price does. Remember, our job is to react and not to, wisec and do whatever I feel like. So it's forming a second bottom here, but we made a call and we expect it to, by the time it closes at the other V-neck, we'll already be in some profit. Okay. This trade is it's still open anyways because it's a 1 minute trade, but it's a tough trade. It's a tough, tricky trade because it's taken at a very risky level of the price. As you can see, now price has a tendency to come and grab liquidity from this support below. We might see that move happen according to what has been happening, as the buyers are not coming in with strong momentum, so price might come to grab some liquidity from down. And if it does, we already saw that. You can see it's made me lose that trade. Need to recover this loss first. I'll take a very big bet because at least I'm sure now it's gonna drop down. We're playing around support, but that's how you analyze the market with pure price action, otherwise known as technical analysis. You see now, market is in a sharp downtrend, and that's why I had to make a good put option, and very confidently, because the downtrend is very sharp and we were rotating around here, which means the market was taking a break and continued dropping down further. So basically, this is how you trade without depending on indicators. If you want to learn more about these things, check the second link in the description. It takes you to my Instagram, or check the one that takes you to my Telegram, where we'll have to talk about, you see, my traders won because it was really, really well analyzed. Market came to grab liquidity from down and it took us out, but on the comeback we made a profit, and it was a huge trade. So now maybe probably liquidity has been grabbed and price touched the other long-term support level, and then we might see it to move away from that level. But in markets, you have to wait for a reaction and trade in the direction of that reaction. You just have to react. You don't have to predict or something. We are seeing something like as a broken support, which might probably become resistance now. Because when we break down below support, it now becomes resistance. So price broke it, and we might see price come to retest that broken structure again. Every structure that gets broken, the price must come back to retest such a level before we see a continuous movement. Though, on the other hand, this could have been a liquidity grab and then a very long-term move takes off, So let's try to call, as we expect this to have been a liquidity grab, because there was a lot of liquidity. If you saw from previously, there was a lot of liquidity, otherwise known as stop loss hunting, where your market has to come and find those stop losses and then takes off in a very swift and strong move. Okay, so probably that's it. It's trying to try to grab that liquidity, and it's taking off to find this level up. So learn how to trade with price action by just learning from my training videos. You will not find this information anywhere, because personally I had to go through years and years of learning to come up with this information. So I do it for free. I put in a lot of effort. So anything you have to do is also do the same, put in some effort and try to learn these things, and then you'll be able to, earn something out of it in the coming time, in the coming years. Even if it takes you a year, even if it takes you 2 years, it will be worth it in the long run, as there's no wrong time and there's no right time to make money. Anytime you make money is that the right time, or whatever. Let's try it going up until we touch that resistance level. So price has finally reached that resistance level, and I'll do something there for you to show you that the resistance level really exists. Everything is just clear in plain charts, and you can easily see those things, I promise you, if you really focus. And so now probably this will become our new support, or sometimes a price swing where price touches, and we can see it has touched there so many times, so it becomes a price swing where price will come and retest a level and continue up. So as you're in an open trade, price already touched that level and took off. So wait for that trade to close and see. Probably this is my very last trade, and I'll just have to end this video. But I hope you guys have learned something, and you guys have really learned that it's possible to trade with price action. Even you can deploy the martingale strategy in the pure price action. Meanwhile, it's very important to maintain the same level of risk throughout, and everything will begin making sense to you. So that's how technical analysis works. It's very, very important. And if you're trading in a live market, I even recommend to analyze from the trading view, which gives you an opportunity to get those trading drawing material, and you'll be able to learn. So thank you. See you again in the next video where I'll train you further.